Hatem Dhiab is managing partner at Gerber, Kawasaki Wealth and Investment Management. He joins us now. Nice to have you back with us, Hatem. And I am curious, I mean, first of all, the moves have been astronomical. What have you made of the obsession the market has had with AI stocks so far this year?
Hey, good to be on. I think investors are seeing the power of generative AI and all these new changes in technology that are happening. As a result, they're getting super excited about the players. So it's just really natural. AI has been around for a while, but we really haven't seen that killer app. And I think ChatGPT and Bard have been that killer app that everyone's seeing the potential of this new technology.
Now, the challenge, I think, for investors is that ChatGPT is part of OpenAI, which is not a public company. They have a big partnership with Microsoft. A lot of money has gone into Microsoft. You mentioned Bard, which is part of the Alphabet empire. So here are two companies that have an interesting seat at the table, but you've got all these other AI names that have been flying higher as well this year. So as an investor, how do you decide whether or not the hype is real with an individual company?
Well, we're not confused. This is just not a hype. I think every company, no matter what business you're in or industry you're in, has to have some kind of AI strategy at this point, simply because the productivity that AI can bring to whatever processes they have is just tremendous, right? So for us as an investor, NVIDIA was really one of the biggest players, and we were investors since 2016. But for us, NVIDIA is like the picks and shovels, right? You want to own the infrastructure. You want to own whoever manufactures the tools to be able to run all these processes. So that's for us is really kind of a core holding, and will continue to be a core holding.
How would investing in an NVIDIA compared to, say, investing in, let's say, Alphabet, the parent of Google? You mentioned Bard, which is obviously the AI initiative over at Google.
Very good question. So it's two different stories. NVIDIA really is, you envision the hardware and the software to run these generative models, and everyone from Microsoft to Google to really anybody who wants to run a large language model has to own some kind of NVIDIA chip or maybe a competitor like AMD. So NVIDIA's TAM or addressable market is massive because everyone has to use their tools. With Google, we think of Google. Google, first of all, invented AI 10, 15 years ago. But what Google does is they have really some of the largest data sets. So basically they have the most ability to create the best language models for them to be able to offer it to any of their clients. So I think Google is also another player that everyone should look at.
Now, another company that has had a huge run this year is Tesla. The last couple of weeks, a lot of that seemed to be fueled by the fact that Tesla is opening up its charging network and quickly signed some deals with the likes of GM and Ford. But I even saw some analyst commentary today about self-driving vehicles, Tesla's technology in that area, which I guess invites a fresh conversation about how much of the Tesla excitement ties back to something like AI.
You're spot on. I think people realize with Tesla opening its charging network that the sum of the parts is actually much bigger than anybody expected. The charging network is really very valuable, and it's the best one out there. But I think I will argue also the AI play for Tesla is a big one, right? They've been training their models or the self-driving models for many years. They have millions and millions of miles traveled in their full self-driving network. And AI is really about data. It's about how much data do you accumulate and how do you analyze it. And I will argue that Tesla will probably have the best full self-driving system available very soon, and I think that's a big thing for their long-term growth.
Hatem, you mentioned, at least in the case of NVIDIA, that's a stock you had eyed some years ago. But if you were putting new money to work, would you start new positions in any of these companies today?
You know, valuations do matter. NVIDIA is not a cheap stock. It's a $1 trillion company that's doing, 40, 50 billion in revenue. I think investors should be very careful and maybe find a better entry point for companies like NVIDIA or even Tesla. However, if you think about, Google or other companies that are actually cheaper, I would definitely try to get in right away.
And then how long do investors have to wait to see the actual business prospects show up in bottom line performance? I mean, obviously, a lot is getting baked in through the stock prices themselves. Do you think this is going to have ripple effects pretty quickly?
You don't have to wait that long for NVIDIA. They raised their guidance by 65% just next quarter. So the numbers showing up the bottom line right away.